Today, I want to talk about a new systematic approach that I'm taking to the markets. And this approach revolves around my trading system that I have built. Now, I don't know how this will perform. I'll use this strategy for the next 4 to 6 months, see how it performs, and then I'll share the results and the performance with you guys. But the way I usually approach markets is I usually manually look at things like macro, seasonality, the COT positioning, technicals, and the bond markets, and I usually get a bias on the markets from that. And if I look at all of those factors and it says something should be bearish, I'd be looking for sells, and vice versa. If it says it should be bullish like the euro, I'll be looking for buys. So you can see that in my system at the moment, euro is giving a bullish reading, and this is after looking at macro, seasonality, positioning, technicals, yields, aggregate all of this data, and it's saying that, hey, I should be buying the euro at the moment. So I have automated all of that process, and I have a system that determines my bias on the markets. But since I've been using this system, it's only been about 3 days, so it's not long, but I'm still trying out new ways on how to actually apply this system to the market, because it's one thing to have something that gives you signal and guide on the market, but it's the next thing to use your experience and your discretion to make the best out of this system. So my new approach to the markets is essentially just testing out my new system and how I should approach it and how I should look at it. And the way that I'm looking at it now is like this. I have 3 types of what I'll call entries. I have a momentum type entry, and a momentum entry is if my system is bullish on a particular currency and I am looking for buys. That would be a momentum entry. So I'm just following the momentum. My system is bullish, so I'm looking for a buy. My system is bearish, so I'm looking for sells. So that's the first type of entry. Next, you have contrarian, and this is when my system is bullish on a currency, but I'm looking for sell. So I'm doing the opposite of what my system is saying. Currently, my system is bullish on the euro and it's bearish on the dollar. And if we head to my trading view right here, I'm actually in a short on euro USD that looks to get stopped out. So you may be saying, if my system is bullish on euro USD, why did I take a short? Why am I in a short? And it all revolves around the new approach that I'm considering for the markets, or that I'd say I'm trying out essentially. So again, I'm just exploring. It's almost as if I'm starting from scratch again with my approach to the markets here. So I'm just exploring and seeing different strategies. So the momentum strategy, the idea behind it is this. My system looks at different features, and let's say, for example, we had a macroeconomic data, or we had some sort of news, and that particular news should be bearish for the dollar. If a particular news release that should be bearish for the dollar actually resulted in the dollar strengthening, that is how I'd have a contrarian bias. Because like yesterday, for example, we had the non-farm payroll benchmark revisions, which was a huge miss, about a 900k miss, and this in theory should be bad for the dollar. But if we look at price action for the dollar yesterday, if we look at the Dixie, the dollar actually strengthened yesterday. If I zoom in on the daily time frame here, so this is the daily time frame, and yesterday you can see that the dollar actually gained strength. So my thesis is that, okay, we had bad economic data and the dollar strengthened. So that means that most of the bad news is already priced in. So as a result, I'm looking to take a contrarian setup. I'm looking to go against the markets, because I'm essentially saying that most of the news is already priced in. So this is why, even though my system is bearish on the dollar, I said, hey, I'm going to take a contrarian position on the dollar and be long, because we had bad news, but yet still the dollar reacted positively. So I'm assuming that most of the bad news is already priced in. As we can see, positioning is very low, so not a lot of people are long the dollar. Technicals are weak and yields are weak. So my system is literally telling me that right now I should not be long the dollar. But we had bad news and good price reaction. So I'm saying I'm going to take a contrarian view. I believe that I should be long the dollar. And the reason why I chose the euro is because we had the opposite situation happening. We actually saw a situation where the euro was weakening on good news. So last week we had some good economic data out of euro, and the euro actually failed to strengthen. So I'm looking at this and I'm saying my system is bullish on the euro. It is looking at macro, seasonality, positioning, technicals, and yields, and all of these main factors that drive currency. It's saying that, hey, I should be bullish on the euro at the moment. But when we get economic data or some sort of news that should be good for the euro actually reacts negatively. So it goes down on good news instead of going up. And the opposite issue, when bad news is released, the euro actually goes down on bad news. So my assumption is that, hey, most of the bullishness is already priced in, and we may see a correction or a pullback or something like that, and I take a contrarian view. So even though my system is bullish and it's saying that I should go long, the fact that we're seeing good news out of the eurozone, but we're seeing bad price action, this is telling me that, hey, we might see a pullback because a lot of the good news is already priced in. So as a result, I'm bearish on the euro even though it is bullish in my system. And this is kind of why I took the short position on Euro USD, which obviously is not really working out at the moment. We actually had bad inflation data out of the US this morning. So we had PPI, which was a huge miss. So the consensus was 3.5 and we had 2.8. So this is definitely not good for the dollar, and the dollar should weaken on this news. So if at the end of the day we actually have the dollar strengthening on a miss in PPI, this is further confirmation that most of the bad news on the dollar is already priced in, right? And the correction on Euro USD is likely. If I get stopped out, then I was just wrong, and I might have to start looking for longs on the dollar. So my system not longs on the dollar, shorts on the dollar. So my system is bearish, and I took a long position and I got stopped out. So I went against my system and I lost. So as a result, I should probably start following my system now. So that's kind of the approach there. And the opposite is true. If my system is bearish and we get good news for the dollar, but yet still the dollar goes down on good news, this is momentum. So I'm not being a contrarian. My system is bearish. We're getting bad news and we're getting bad price reaction. So I'm simply just following the momentum. So things look bearish for the dollar at the moment, looking at all of these 5 different factors. And when we have good news, it reacts negatively. And when we have bad news, it also reacts negatively. So this is saying that I should be with the momentum. I should go with the flow of the markets. The markets are saying that, hey, we're bearish the dollar, so I should be looking for shorts, right? So that's the second type of entry, which is momentum. So you have contrarian, where I essentially go against my system. You have momentum, where I follow my system. And then you have just range, which is my favorite type of market. So if we're in a range, I'm essentially betting that the markets will just continue to range and I take either a sell or a buy. So I have no upside bias or downside bias. I'm just buying at support and selling at resistance. So that's the third type of entry that I can take, a range. So we have contrarian, I go against my system. Momentum, I'm following my system. And range, where I have no directional bias and I expect the markets to just move sideways. So that's basically the new idea and the approach to the markets that I am taking. I'm just now exploring this, so I don't know how the performance of this will be. I don't know if in the next 4 months I'll make a lot of money with this new approach to the markets, or I don't know if I lose a lot of money. We'll just have to see. I'll just stick with this approach, stick with this strategy, and see how it performs. But at the moment, it makes logical sense, right? It in theory should make money, but we all know that with trading, it's more about having skin in the game and actually putting the theory to work that makes the money. It's not theory. So in theory, this approach and this idea to the market should make money, and the next 4 months will determine if this theory is right or not. In 4 months, I'll probably take about 40 to 50 trades, which isn't a large enough sample size to determine if this new approach or this new strategy is profitable. So I might have to give it a further 6 months or so. But yeah, that's my new systematic approach to the markets. If you guys have been following this channel, you know I've been working on this system for a very long time, over 7 months now, and it's finally complete, and now it's about execution. So once I am comfortable with the system, I understand it, I get used to it, I see the different things and whatever, then I will release this to the public, a free beta version where you guys can try out and so forth. So yeah, that's about it. That's really what I wanted to talk about in this video today, just my new systematic approach to the Forex markets. And if you guys want to track my live performance, so see how I'm actually performing using this strategy, I have my public tracker card below in the description that you guys can look at. So you guys can check the description below for my public tracker card to see how I'm actually performing with this new strategy. So you can see that my old approach to the markets for the past 6 months, it has been making money. As you can clearly see here, I've been profitable for the past 6 months. But this new approach, I just want to explore it and see if this new approach will be profitable. So I believe that this strategy, in theory, it should be profitable. So I should still consistently be making money using this strategy. But again, in trading, it's not about theory. It's not about what someone thinks makes sense. It is, does it actually work in the markets? So again, you guys can check my tracker card down in the description to, you know, track my performance and see how I'm performing using this new strategy. But yeah, that's what I wanted to share in this video today, my new approach to the markets. Peace and trade safe.